What do you think is, posting this consistent rally in pharma? How do you explain this, very sedate sector, 10, 12, 15% CAGR growth in profit and top line, now ruling the charts?
I think it's very story specific. Cipla and Sun obviously are the more generic, larger players. They don't have specific stories. The broader businesses have been doing well. US particularly, the price deceleration has been arrested. There has not been any acceleration. Prices have not gone up, but at least the downward spiral that prices were exhibiting, that has been arrested, and that is why most probably the margins might look better. The API related prices because of China closure on and off in COVID region, that was a problem they were facing. And logistic issues again have made a comeback because of the Israel-Lebanon issue. But I think largely, other than that, most of the other issues have been addressed, which were key to their margins. On the one side, your selling prices were coming down, and on the other prices, your raw material availability as well as your raw material prices, the API prices particularly, were much higher. So I think that reversed over the last 1.5 year, resulting in a lot of re-rating for most of the companies. To be specific, I think Lupin and Aurobindo were already very distressed because of the past events that had happened in the companies and some of the products they had. In Aurobindo, there were some corporate governance issues. So valuations were what, 8, 9 times. That now has crawled back to 20, 25 times.
Yes.
Similarly, Lupin, I think the margin scenario and the top line growth scenario has come back because some of the products have received good traction in the US. But now I think most of the positives might be very well priced into most of these stocks. And in case anything negative comes in for any of them, there could be some correction. Like for CRAMS, there has been a lot of positivity of late. Even today's most probably DVs is up very handsomely. But CRAMS would see some headwinds from the fact that in case the rupee also starts appreciating vis-a-vis the dollar as most of the other currencies have done, then CRAMS becomes in a sore spot actually. So I don't think right now at these valuations the CRAMS stories make sense. The Chinese change, I think that is something that is positive for companies like Piramal, Syngene, etc. They could gain out of it. But Piramal, I think most of the positives are already priced in at current prices. Even Syngene, I don't think there is a lot of valuation comfort. So when you scan through the space, maybe I would miss some names on the smaller API side or some companies. But largely, when I look at, I think if within the front line, I would still be comfortable with Dr. Reddy's. The valuations are comfortable vis-a-vis most of the other companies, and the Indian business should do good. And this quarter, most probably, the US business part of most pharma companies should also do good. So I think this quarter also, most probably, if I have to take a bet between something that can do well and valuations are comfortable, I think Dr. Reddy looks better vis-a-vis the rest of the pack.
Absolutely, on a monthly basis, Dr. Reddy's has done nothing. And look at how Divi's is outperforming, Sharadji. Moment it's out of the Nifty, it's like a weight that has lifted out of its shoulders. When did you last time see Divi's up 8% in a single day? It's such a slow coach, but what a fantastic performance. Record high beyond 6,000. I am now thinking in terms of maybe this is a split and a bonus candidate.